I'd like to speak to you this evening about a lithium project. In fact, it's currently the largest lithium project in Europe, and that's a region that is very hungry for lithium. It's a region that has no meaningful production of lithium of its own currently, and this is at a time when we're seeing dramatic increases in the demand for lithium and lithium products and the price of those products. And all this against a backdrop of the world going green. So after those disclaimers that Mike mentioned, guaranteed to put you off investing completely, the resource lies in our 100% owned Cinovec project in the Czech Republic. Now, as it says on the slide, Cinovec is a globally significant project, globally significant in lithium and tin. So why is it that we say it's a globally significant project? Well, firstly, with regards to its size. As I mentioned earlier, it is the largest lithium resource in Europe. And if you look at the bar chart we have there at the top right, the dark blue section is the size of that resource as it stands today, our inferred JORC resource. In fact, not only is it the largest resource in Europe, it's the fourth largest in the world currently of hard rock lithium deposits. The two lighter coloured bars above that dark blue represent the upper and lower ranges of our JORC compliant exploration target. And if we were to go about bringing any significant portion of that target into our inferred resource, we could actually go out and say it's the largest hard rock lithium resource in the world. That isn't particularly important to us. We're quite happy for the time being just being the largest in Europe. It's also one of the largest hard rock tin deposits in the world as well, and I'll talk about that a little more as we go on. Secondly, it is potentially the lowest cost producer of lithium carbonate in the world, and I'll elaborate on that a little further as well. And thirdly, why is it significant? As I say, its location in the middle of Europe makes it so. Lithium in Europe is becoming more and more important. I will elaborate on that as well, but as I said, Europe is a net importer of lithium. It's the second largest importer in the world with no significant production of its own. Before I talk more about the deposit, I'd like to just touch on the subject of lithium itself. It is a metal that until quite recently not very many people knew much about whatsoever, despite the fact that it has been around for quite some time and we all use it every single day. We're using it more and more with our personal devices, phones and laptops and all that sort of thing. But what's been driving the demand for lithium over the past couple of years is really solely down to the battery industry. So the lithium-ion battery has become the global standard of batteries over a good 20 years of development. And this has become very significant in two particular applications that I'm sure you've all seen mentioned in papers recently. Firstly, there's electric vehicles and the significant increase in the demand for electric vehicles. And secondly, there is it with regards to the power storage market. So as the world goes green and starts to rely more and more on renewable energy, the one thing that renewable energy requires is storage of that energy. It's all very well to have large wind farms, as you have right across Western Europe, but when the wind isn't blowing, you need to have stored the power that you generated at the time it was, or the same is true of solar energy. And in this particular area, in power storage, it's anticipated there will be a 30 times increase in demand for batteries for power storage between now and 2020. As it says on the slide there, the demand for lithium batteries is forecast to grow from 65,000 tonnes of LCE. LCE in the lithium world stands for lithium carbonate equivalent, to 163,000 tonnes in 2020. And as the next line tells you, that equates to approximately $70 billion US dollars of batteries in 2020. The lithium carbonate price, which is the compound that is most often manufactured from lithium and sold to battery manufacturers, the price of battery-grade lithium carbonate will increase by almost 50% in the 12 months to October 2015, and there have been reports of sales in China in January this year of $12,000 to $14,000 a tonne. So the increases in the price of lithium seem set to continue. The Cinovec deposit. So the Cinovec deposit has been around for quite some time. Tin was first produced from this mine in 1376 and off and on has been produced in the area for over 600 years. The history of lithium in the area is considerably shorter. The first lithium was mined in this area in the 1920s, and in fact the first lithium carbonate produced in the world was produced in the 20s with ore from this mine. There's also been some small production in the 80s as well, but it wasn't really until the price of lithium started to increase dramatically over the last 12 to 18 months that we've refocused the attention onto Cinovec Lithium. You'll see there from this slide the size of our inferred resource, again quoting lithium carbonate equivalent, LCE, and also the tin resource that I mentioned earlier. This is a cross-section through to the deposit, looking to the east. You can see the German border there to the left of the screen. Oh, sorry, wrong button. Up here. And the deposit then runs away down the hill to the south into the Czech Republic. You can see the lithium resource outcrops in the middle of the slide, and this is the area of greatest interest to us. The horizontal lines are the old workings, the old underground mines. As I said, there's been a long history of mining in this area. There's over 80,000 metres of diamond drilling into the deposit and over 20 kilometres of underground workings, all of which is infrastructure that we can reuse once we reopen the mine. As I mentioned, the project is located in the Czech Republic. It's right up on the north, on the German border, as you saw from the cross-section, and this is extremely important. As I said, it's an area with a long history of mining. It's well serviced with infrastructure, roads, rail. There's power. There's a very large coal industry in the area. There's good water supply and also very good access to a mining workforce as well. So from a locational point of view, it's very handy for us. So getting back to the use of batteries in the automotive industry, a lot of large European car manufacturers have announced over the past year electric vehicle initiatives. Volkswagen, notably, after the issues they had, are leading the charge with this, with a move to electric vehicles. And Porsche, in fact, announced only about a month ago that they were going to spend $1.8 billion on developing an electric supercar to rival the car that Tesla in the US have been producing. Along with that, as I say, you have a very large area for renewable energy. On the road from Prague up to our deposit, there are many, many solar panels in the fields. The solar energy industry is very strong here, and in fact just over the border in Germany in Freiburg is a very large manufacturing plant for SolarWorld, which is one of the largest manufacturers of solar panels in the world. So we have very good access to end users with this location. We produced a scoping study last year which concluded that Cinovec was both technically and financially viable. It's a relatively straightforward mining operation. In the scoping study, it's been modelled on a 2 million tonne per annum mine, followed by a traditional gravity process route to extract the tin and the tungsten. As I say, it's something that they've been doing in this area for many centuries. And this will produce a very clean, high-grade lithium concentrate that feeds a lithium process plant to produce battery-grade lithium carbonate. In terms of the lithium processing, that is, once we've extracted the tin tungsten from the lithium concentrate, we've been evaluating 4 separate processing alternatives, all of which have been used previously to manufacture lithium carbonate, battery-graded lithium carbonate. The scoping study process route we used was based on a heads of agreement we have with another Australian listed company called Lithium Australia, it was utilising a proprietary, proprietary technology developed by an Australian company called Lepidico, and using that particular process for the scoping study, we precipitated battery-grade lithium carbonate and also produced significant quantities of potash as a byproduct. The byproducts in this project are very important in helping us lower the overall cost of production of the lithium carbonate. As you can see from these numbers, just taking the potash credits into consideration, we produced lithium carbonate at an estimated cost of $1,500 a tonne. And when we then take the tin and the tungsten byproduct credits into consideration, that number dropped to below $1,000 a tonne. Now this is particularly significant if you look at, if you look at the bar chart here. These are all of the world's current significant producers of lithium and lithium carbonate, and the average cost of production there is around about the $2,000 a tonne mark. If we are able to, at commercial level, when we get to that stage, produce at the levels we've been able to in the scoping study, we will be the lowest cost producer of lithium carbonate in the world, net of our byproduct credits. So that could be a very significant development for us. So with all of this going for us, we would hope to have had a market capitalisation of something more than £4.8 million, but such is the nature of the junior mining sector at the moment that's where we are. We have 87 million shares, or CDIs in fact, on issue. We're actually listed in Australia and on AIM. We dual listed on AIM in December of last year. So 87 million CDIs on issue, another 20 odd million options that are due to be paid up in June of this year. They're 10 cents Australian to pay, as I say, for a market cap of something less than £5 million. In terms of our shareholder base, our largest shareholder is the AIM-listed company Rare Earth Minerals, or REM, a company some of you may be familiar with. My fellow directors and I own another 12% of the company, and along with our Czech shareholders, the vendors of the project, who still own all of their shares some years later. In terms of our board, Dave Reeves is our non-exec chairman. Dave's in the audience here and will be around after presentations to answer any other informal questions someone might have. Dave's a very experienced mining engineer. My background is in stockbroking and mining finance. Pavel is our non-exec director in country. He's a Czech national and a geologist. And Kieran Mazaria, who joined our board at the AIM listing, who I think is here, but I can't see him. Oh, there he is. Hi, Kieran. Kieran's actually the CEO of Rare Earth Minerals, of REM, and is also on the board of Bacanora, another company you may be aware of, who are developing the Sonora Lithium project in Mexico. If you look at that very poor market cap and we compare it with a lot of other listed lithium companies, I'm sorry to jump around with currencies, this slides back into Australian dollars. It measures the enterprise value per tonne of resource of lithium carbonate equivalent, of LCE. You can see that we're languishing there at about $1.60, Australian $1.60 per tonne of resource. Bacanora, the company I just mentioned, is trading at about 10 times our EV. They are somewhat more advanced than we are. But as you can see further up the bar chart, two other Australian companies, Neo Metals and Pilbara, trading at significantly greater EVs than we're carrying on a per tonne of resource basis. So we think there is some room for re-rating in our share price. Our plans for 2016, we're just concluding a drill program that we started late last year. On the conclusion of that, we will reevaluate and plan for our second drill program, which will start fairly shortly. The main focus of that will be to convert a significant portion of that inferred resource to indicated, to strengthen the confidence in the project, and to form the basis of our PFS, our preliminary feasibility study, that will conclude in 2016. We're continuing with trade-off studies regarding the lithium process route, regarding where we will begin mining, where the plant will go, sort of thing. Further pilot test work on the lithium process route and the potash byproduct production. Environmental work, Dave and I are in Prague early this week, and we've narrowed down our environmental consultants. That process will start within the next month. We have commenced discussions with various strategic partners. I think in this game a junior needs to nestle up to a big brother in the industry, perhaps an industry player, a battery manufacturer, a car manufacturer, someone of this ilk, and we have plans along those lines. And as I say, completing the preliminary feasibility late this calendar year. So if I can summarise that, Cinovec is the largest lithium resource in Europe and one of the largest non-brine lithium resources in the world. It's potentially the lowest cost producer of lithium carbonate in the world, net of those byproduct credits being the tin, the tungsten and the potash. It's located centrally in Europe near end users, very large companies. The world seems to be, the battery world seems to be very much preoccupied with Tesla and their initiatives in the US, but there are some significantly bigger automobile companies that you all know right on the doorstep of this project in Europe. And we are trading at a significant discount to our peers on any sort of comparative basis. Ladies and gentlemen, that concludes the formal part of the presentation. Are there any questions, please?
Any questions, everyone? Just down here.
Thank you. Richard Williamson from Edison. I'm just interested as to when you will enter full production and how much capital you will need to get to full production.
In terms of when, it's a bit of a moving feast. We're hoping for 2018. In terms of capital, we only have our scoping study numbers to go on, which suggest CapEx in the vicinity of $320 million US. But as I say, they're scoping study numbers and they need to be narrowed down.
And at the moment, the cash resources of the company are?
Limited. Like all good juniors.
Evening, Keith. Neil Pigeon from Hardman. Just going back to the hard rock nature of the resource, and you've got all the nice credits and things, but how do the economics of that tend to compare with the solar deposits over in South America from a cost point of view? And I assume you're underground mining into veins, are you, with the hard rock? Or is it an open pit type structure?
Well, permitting an open pit in Europe we think might be problematic. If we can get away with that, that would be fantastic, and it's not built into any of our forecasts whatsoever. In terms, well, the slide I showed on the potential cost of production of lithium carbonate indicate that without those byproduct credits, we'd be more expensive than the cheapest of the brine producers. So the byproduct credits are certainly important to us in that process.
Thanks, Keith. You alluded earlier to lithium batteries being used as a bulk energy storage solution. I'm just wondering how efficient that might be on a charge and discharge cycle compared with, say, pump storage?
Yeah, it's an interesting point, and it's still being debated hotly throughout the entire industry. In fact, we had a meeting this morning in Frankfurt in the offices of a company that's one of the largest lithium producing companies in the world. And even amongst the three guys in the room, they couldn't come to agreement on that very point as to whether lithium-ion batteries would be the battery of choice for power storage. They argued that in the instance of home storage, they are more likely to be, but perhaps in large-scale industrial storage, they may not be. But as I say, not even those experts could agree, three guys from the same company. So the jury is probably still out with regards to that in total.
Thank you.
Next question, anybody? Lady just over there.
Lina Rashmir. I would like to ask you, the shares of Tesla going down now, what do you think about it?
Well, I mean, Tesla is a much, much bigger company than we are, or any of these, lithium producing companies we've spoken about. And it's a very volatile company. Tesla doesn't just manufacture electric vehicles, as you probably know. They also manufacture space rockets, which is a highly risky business, if you like. And I believe that they had a spectacular failure with one of their rockets just as recently as last week, which I think might have had something to do with that. Although they are still very much a driver of the electric vehicle industry. And I think this is as much about the passion and the public image that they put out there. Plus, they're really the first people to come out and show that an electric vehicle can look good. We'd all seen some of the hybrids driving around, and not to name any of them in case I offend someone, but most of those vehicles weren't particularly good looking. So Tesla really focused public attention on this area. But as I say, they're not the solution to this for all players in the industry.
Gentleman at the very back.
Richard Grant. With more lithium brine products coming on stream in South America, and there's expansion in Bolivia, don't you think that the price of lithium brine is going to go down and therefore make it more competitive? Yeah,
there are a few points there. The ramping up production with the brines takes a great deal of time. They're slow to add production. It's a very, very long process to begin with. There's a very interesting piece of research that Citi came out with in about October last year, and they concluded categorically in that bit of research that the gap between supply and demand that's forecast 5 and 6 years out won't be met by the existing major producers of lithium. They simply don't believe that they can ramp up in time. Plus, as well as that, I quoted some numbers of $14,000, $15,000 a tonne sales that we've heard of with lithium carbonate very recently. We're certainly not using numbers anywhere near that in our forward projections. Our scoping study was based on $6,500 a tonne. And I think it's prudent to use significantly lower numbers. Just because there is an increase in the demand for lithium doesn't necessarily mean it will translate into an increase in the price, or that significant an increase in a price, which is why we're very comfortable being where we are, both location-wise and also in terms of our own cost profile from the work we've done so far.
My name is George. Can you explain to us the difference between brine and non-brine? I know nothing about...
Sorry. So lithium has been traditionally produced from two different sources, what we call hard rock, which is what most people would understand to be traditional mining, drilling, blasting, what have you, crushing and grinding to extract, etc. But a large part of, it's about 50% currently of world production comes from what is termed as brines. And what these are typically high altitude salt lakes, salars, where high altitude, cold climate, low precipitation environments where they have tremendous evaporation, and you effectively have evaporation off the old salt pans, leaving the minerals behind, the metals behind, of which lithium is one.
One last question. You're right on the German border. Are there any... does this resource go under the border at all?
Yes, yeah. The tin resource has been mined on both sides of the border, as I say, for some 600 odd years. In fact, you can go underground on the German side in a tourist mine now and walk all the way to the border. There's an underground gate, border crossing effectively underground. From what we know, the deposit on the German side, it's deeper, it dips more, and it's not as rich in lithium as it is on the Czech side, although there is a company exploring that currently.
Okay, thank you.
Sure.
Robert, who's quite well known for asking awkward questions. So, Robert, over to you.
I don't want to be awkward, but you did stress how cheap your deposit is at this time, how cheap your shares are, and the low cost. Is it fair to compare yourself with, say, Neometals or Pilbara in Australia? when you consider how far advanced they are, Neometals is going to be producing this June, and it already has funding, it already has contracted production. The two surely aren't comparing apples and apples.
Well, no, but there's not that many apples and apples in the lithium industry. Full stop. It's a relatively new industry. I mean, you could go as far as saying Neometals and Pilbara are both. They're actually producing a concentrate. They're not even going to go as far as producing lithium carbonate. They're both going to produce a spodumene concentrate. Spodumene being the host rock. It's a different type of hard rock deposit to ours, which is a mica. But they'll end up producing a much lower value end product. You can get to production much quicker doing that, but they'll be selling a spodumene con for probably $400 to $500 a tonne into the Chinese market. You're right, it's not apples and apples, but as I say, there's not that many direct comparisons. And I think also that the slide would indicate that although they are more advanced than we are from that point of view, there's a significant difference in the EV that the relative markets are giving both companies.
Any more questions? Well, I've got one. Can we just scroll back, do you think, to the 2016 programme? Yeah, small caps generally unloved at the moment, although there's been a little bit of sort of interest in metals and mining companies.
There's that we.
Yeah, that's the one. So obviously this is your 2016 programme. For an current investor or potentially new investor, could you put some sort of timelines against this over the next 12 months where you think you'd like to make some announcements about? Well,
we'll announce the results of the last two holes of our current program within the next week or so. And
are those positive?
Well, I can't say. They haven't been announced. It's a trick question.
Trick question, obviously, if that's a yes.
Look, the results to date have been as expected. It's a very consistent ore body. There's been no surprises in it to date. We've had a 100% success rate in converting target to inferred and inferred to indicated. So it's a very consistent ore body. I don't anticipate that those results will be anything other than in line with where they'd be expected to be. We've already started planning for the next drilling program, and we are currently, in fact, two of our guys are talking to drillers tomorrow to try and get that ready and started as soon as we can. So we'll be announcing that also relatively soon when the next drill program will start, and then there'll be obviously ongoing results from that drill program as it comes. Regards to trade-off studies, the lithium process route will have results in about a month with regards to the test work we're doing, the evaluation of the 4 different process alternatives. Pilot test work, that is ongoing, but we will ramp that up once we know which of those process routes we're going to use. So you're probably talking with that towards the middle of the year, I would think. Environmental work will begin very shortly. We'll appoint those consultants within the month, and getting a mining permit is a process that'll probably take 6 to 8 months, but it'll be started very soon. We've begun discussions with strategic partners. They'll take time. Little companies talking to big companies, it always takes time. EU grants is ongoing. There are significant EU grants available under the Horizons 2020 initiative, but there is a hell of a process to be considered. And we intend completing the PFS towards the end of this calendar year. So that's the timeline.
So there's quite a lot coming short term and
yes.
Obviously over the year as well.
Yeah, well, it's tried to ramp up as the question suggested. Some of these companies are set to go into production next year. We'd like to accelerate and get there as soon as we can.
And somebody did mention about cash in bank. It is a question of all investors. Have you got sufficient to take you through this calendar year, or will you have to raise at some point? Yeah.
We'll be raising. We listed on AIM in December deliberately without a raising because it makes the process of dual listing quicker and cheaper, but we knew we'd have to raise money fairly shortly afterwards.
Has that brought any other questions out? Got time for one more question. Anybody? No? Keith, thank you very much indeed.
Thank you very much.